SpaceX lost $1 trillion in value its first month after launching. The stock is now only barely above the $135 IPO price. Elon Musk is now also the biggest loser in history, money-wise. He lost $240 billion in one single day, and for some perspective on that, the second richest person in the entire world is worth $280 billion. I called this out on launch day with my video about why I won't be buying into SpaceX, but in this video I'm going to explain a few fundamentals that should have been clear warning signs to people not to buy into this IPO. So why has SpaceX tanked so badly, and what can you learn from this to apply to other stocks that you may think of buying into? Because this isn't really about SpaceX. It's about avoiding making the same mistake with the next hot company. The first warning sign was the valuation. One of the simplest things that you can look at is something called the price to sales ratio. Now imagine two coffee shops, each of them make £1 million a year in sales. If one coffee shop is worth £5 million and the other is worth 100 million, which one has the bigger expectations built into its price? Now that is exactly what the price to sales ratio tells you. It's simply the value that investors are placing on every dollar of revenue that the company makes. And in the case of SpaceX, there was a lot of speculation. SpaceX was trading at an absolutely eye-watering multiple, a lot higher than most large companies. That meant that investors weren't paying for what the company was earning today, they were paying for years and years of future expectations. The problem is that once that expectations get that high, even the good news isn't always enough. If the revenue of the company grows by 30%, but investors were expecting 50%, then the share price can still fall. This is why I didn't invest in SpaceX, because the market speculation made the stock price go way ahead of the reality of how much money the company was actually making. The second warning sign of SpaceX was the lockup period. When a company first goes public, the founders and employees and early investors usually aren't allowed to sell their shares immediately. That is what it's called, the lockup period. The first part of SpaceX's lockup expired, making more than 900 million insider shares available to be sold, and more than doubling the number of shares available to trade. Now, interestingly, we didn't actually see a huge wave of insider selling that many people expected, which is one reason that the stock has just about bounced back above its IPO price this week. But that's not really the lesson here. Analysts are still watching future lockup releases because more shares are going to become available to trade later this month. So before you buy any stock, especially an IPO, ask yourself these three questions. 1, is the valuation already pricing in perfection? 2, are there any major events coming up like earnings or lockup expiries? And 3, am I buying the business or am I buying the hype? Because the market has a habit of reminding investors that price and quality are not the same thing.